Excellent. So you guys can hear me okay? Perfect. Got a good connection. Fantastic. Hey, Dar, Daniel. There's a lot of you guys in here. Some of you I may know, some of you I don't. First of all, foremost, I want to thank Renee and her team for allowing us to come in here. We always enjoy spending time with like-minded individuals. And you know, it's interesting. We're in the middle of Saturday on a weekend where most people would be you know, going out and doing their normal routine. But those of you that are in an event like this on a weekend, it really kind of speaks loudly to your commitment to development, speaks loudly to your passion towards the space, and it makes it easier for me as an educator and presenter to actually do my job better, which is help traders become successful. So thank you for being here, and hopefully you get a lot out of the event. Before I go any further, I just want to put a few links in the chat box. And the reason I'm doing this is ultimately because I've got some things I'm going to give you guys. Okay, I'm going to make sure I present that to the audience. There we go. I'll probably do better if I give the link to the traders and not the presenters. Perfect. Okay, so there's the homepage to the website. The reason I'm giving you the homepage, some of you may or may not know who NeuroStreet is or what we do, and there's a free pass button right in the middle of the site. And essentially what this is it's a link to this page. Now I'm going to copy this and put this in here because we run a couple trading rooms. We actually run several trading rooms. We don't just run one trade room, and the reason for that is we actually have several instructors that teach different trading systems that we've developed and designed and we operate on. So our two primary focuses are market profile and supply and demand and order flow analysis. So the reason I put this link in here first is so that we can give you guys an added benefit for you guys to come in and actually get started with us. And I just want to kind of talk a little bit about why you should actually listen to me, and the reason I'm stating this clearly before we get into the presentation is because this industry has a lot of great presenters, it has a lot of great products, and it's a really big space, whether you're trading futures, forex, or stocks. But one thing that we've made a very recent decision to do over the past year or so is we're really upfront about performance of our trading room. And so what I'm going to do is I'm just going to put some links in here for the performance. We actually post the broker statements right on the site. So if you're interested in actually taking a look down here at the bottom of the links here, there's just every month broker statements for the past several years. We're not talking 1 month, 2 months. We're talking several years. And then we also run another trade room here, and this is an educational environment room for scalping the markets, and this is the broker statement, or the performance statements and everything else for this room, right? So it depends on which room you're in. It depends on the type of capital that you're trading with. Obviously, these are our instructors' results. That's why they're teaching our trade rooms. But these are trades that are taken in the room for both programs. So this should open your eyes to the possibility that it is possible. And the reason I'm saying this is because, there's a lot of information for you to consider. I'm a firm believer that if you're going to buy into something and invest in your own education and advancement, make sure you do your due diligence. I just really truly believe in the fact that, if you're going to join a trading room and you're going to listen to instructors, are they doing what they're doing, and can you show us? End of story. Right? So that should hopefully kind of lead into the segue of you at least wanting to join our trade rooms. Our top performer did 1.4 million in the account broker verified last year in the trade room. Okay, so if you have any questions on that, I'll stick around at the end and we'll go over that. Okay, so that being said, what I'd like to do is I'd like to kind of go into the topics for today, and hopefully you guys are enjoying your weekend. I'm really excited to be here today. It's been a while, Renee, since you had me in here. And the goal for this webinar is to show you how to scan global markets. Can you guys tell me if you're trading stocks, futures, or Forex? Can you just type that in the chat box? I'd really like to know the audience. Really like to get a feel for if you're trading day trading, if you're swing trading, if you're trading Forex, stocks, futures. It really kind of helps me steer the discussions of this. And Steven says he's trading futures. There's several hundred traders in here. Hopefully you guys can respond to that. I do appreciate a dynamic audience because it allows me to be able to help you guys better. If you got YouTube open or Instagram, or if you're on a movie on Netflix, turn it off, because what we're going to do is we're going to show you some really, really key components here, and I think you're going to really appreciate the event. Okay, so that being said, I'm going to teach how to scan global assets. Now, what does that mean? Well, we've built a software add-on for every trading system. So it doesn't matter if you're trading our strategies or if you're trading your own strategies. The topic for this event caters to everything. And that's why I chose to do this for the speaker jam, because I knew there would be a lot more traders in here, especially on a Saturday. And what I'm going to do is I'm going to show you how to scan every single market that you trade with this add-on, so that you can formulate permissive action to be able to take trades using your indicators, okay? Now, I need to cover a quick disclaimer. Obviously, we posted performance in the event. It's really important that we do, make sure you guys assess the risks, and past performance never guarantees future results. And we all know this, but it is important to cover that moving forward, okay? Now, I have an agenda. I think it's important to follow a topic agenda. I'm going to introduce my team so you know who the instructors are that are basically there putting that performance on the website. I'm going to talk about the auction curve overview. I'm going to give you a frameworks discussion. Most importantly, I'm going to help you understand permissive action. How many of you guys in here are using different indicators, whether you're trading supply or demand, momentum, support or resistance, market profile, volume profile, divergence, you name it. You still need to have some type of permissive action to stack the chips in your favor, and that's exactly what this event is here to do. It's going to show you how to scan the markets to show you whether you're in a conservative or aggressive environment based off location and structure. And then we'll do a deep dive on that so you can understand what the software and the market scanners look like. Now, we do have a special offer, and I will spend some time with some Q&A, but at the very least, guys, the end goal for me is obviously, if you like what we see here today, fantastic. If you're interested in purchasing these tools, great. But I don't believe that's the beginning of our journey. I think the beginning of our journey is you joining us in our trading rooms and getting to know the educators, getting to know me, getting to know the strategies, getting to see the software demonstrated, because nobody learns how to trade overnight. Yes, we are profitable. Yes, we prove that through transparency. However, that doesn't necessarily mean you're going to learn it today or tomorrow. We want to make sure you do learn it and you understand it, because this is a business. And for those of you that are investing or even day trading, or if you're doing both, I truly think that it's important to learn how to walk before you jog and then run, okay? Now, that being said, here's a group of the trading educational team. I've got Michael, who runs the order flow and supply and demand room. My name is Sean Kozak, the president of the company. I'm the head educator and lead architect for all system design and software that we use. And then Raul heads off our market profile room, who's a market profile specialist. Ashley and Ben work on the back end with Renee and the teams to be able to put these events on. And obviously we have a development team and a sales team and an account management team that can work with you. We are a globally recognized trading school. We are not just a company with one room selling an indicator, okay? We are here to help you. And we have a huge team to do that, because we do very good at what we're here to do, okay? Now, that being said, as I mentioned, why is this even so important? Because everybody in this event trades different strategies, right? Everybody in here has probably bought a trading system or been to a trading room or developed their own approach, or maybe have a lot of market knowledge. But at the end of the day, if you're going to maybe make an adjustment, you still need to get comfortable with that. And that's what this tool is designed to do. It's designed to integrate into every trading system. Okay. Now, the purpose for this, it's driven by two fundamental aspects: auction theory and structure. The two most important parts of every trading system is location and who's controlling the market, because you can only ever have one dominant force in the market. You're either buyers are controlling the market or sellers are controlling the market, and you're either at cheap prices or expensive prices. It can never be anything outside of that framework. Whether you're using indicators or just trading price, you're either at wholesale or retail price levels, and you're either having buyers or sellers controlling the market. That's just how the financial auction works, okay? Now, when we built this integrative tool, to work with all of the trading strategies. We follow a framework because it's kind of like a trade map or a checklist. The first thing we need to do is we want to filter trades by locking in the location. Are you at cheap prices or are you at expensive prices? Now, I know a PowerPoint doesn't do justice by us demonstrating these concepts, so don't worry, we're going to get into charts and we're going to spend a lot of time on the charts. But I just want to point out the fact that, you know, we always need to locate, are we at cheap or expensive price levels first? If you do not know whether your market or asset is viewed as cheap or expensive by the bigger traders in the space, then you're at a serious disadvantage to those who do. Okay? The next thing is understanding what structure is actually telling you. Okay, you know, I had the privilege of listening to some of the other traders that presented today, and I've been involved with this industry for a very long time. And there's a common thread that goes through a lot of trade rooms is understanding market structure. Market structure is really important because it tells a story about who's controlling the order flow process. Order flow is important. Supply and demand is important. But all of that can be read by the market structure. Knowing how to read price is critical, and doing it at the right location allows us to be able to form permissive action. A lot of traders in here, a lot of traders actually should understand that, yes, buy and selling opportunities should be shown to them. I've heard earlier when the previous presenter was on, you know, and kudos to him, he did a great job. The thing here is that, you know, a couple questions that he was being asked, and I'm assuming you'll ask me the same things, is do you provide buy or sell recommendations? We can't tell you to buy or sell, but we can show you why we'd want to. We can show you that, you know, based off X, Y, Z happening, this is an environment where we should be looking to buy or sell with a lot of evidence of probability. And I don't like using that word probability because probability should only be used if you can back it up. We can back it up, so that's why I use it, right? So let's kind of talk about this. When you guys take trades, I would challenge the fact that a lot of us never ask this very simple question. Am I a buyer or am I a seller? And why is it super important? It's really, really important to understand because most traders will launch their platform, open up their charts, and get ready to trade. But we never sit back and say, should I be buying or should I be selling? What is the reason behind that? The next one is, am I aggressive or conservative? Do I want to take an aggressive stance in the market, or should I be a conservative applicant and have a reason for that? That's exactly what I'm here to show you today. I'm here to show you when you should be a buyer or a seller and whether or not we want to take an aggressive or a conservative stance in the market, because the auction curve tells you when we can trade. Your entry methods tell you where you can trade. So here's the cool part. I'm here to give you part number 1. You all have part number 2 already installed on your computers, or you already have bought trading systems, or you've ever attended a trading room. I would challenge the fact that this can be integrated to every single trading system that you guys have exposure to. And I'm here to show you why that's possible. Some of you may trade supply or demand. Some of you may trade order flow, volume profile, Fibonacci levels, momentum, and divergence. These are examples of entry methods. Entry methods are a reason to get into a trade at a specific location. The auction curve tells us when we should be looking to do that. Many of you guys have bought indicators before, and sometimes they work and sometimes they don't. This tool is to put the odds in your favor so that you take trades when your indicators are expected to work a lot more. And that's why we designed this, is to basically enhance your indicators, enhance your strategies. Okay? Now, how does it work? Well, the first thing we do is we separate the auction. We basically define, using a subset of rules, which we're going to explain in a moment, where the market is based as cheap or where the market is based as expensive. Now, I'm going to grab a trusty little draw tool here so I can draw on the charts. And I'm just going to circle here, retail and value. Everything up here is considered expensive. Everything down here is considered cheap. But that doesn't tell us where we should be looking to buy or sell. Doesn't tell us how we're going to buy or sell. It just tells us what to understand about the auction. Because that's exactly what every trading market is. It's a daily auction. If you're trading the Apple stock, you're trading an auction of Apple stock. If you're trading crude oil futures, you're trading the crude oil futures. I've got a question here. Someone says no sound. Can you guys hear me okay? I just want to ensure that I don't keep speaking unless there's an audio connection. Is there good audio? Yes, everybody's okay? Excellent. Okay. So here's the thing. The first question is, am I expensive or am I cheap? Well, we can prove that using what we call the auction curve grid. This is a grid where basically we basically put a diagram on the side of your chart that tells you when you're retail or when you're at value. And sometimes the market will be going up and you'll be expensive. Sometimes the market will be going down and you'll be cheap. But let's not lose sight of the fact that anything up here, regardless of direction, is retail. Anything down here is value. So it doesn't matter whether your strategies are telling you to do something. It doesn't matter if things are telling you different types of analysis. All that matters is that you understand if your market is viewed as expensive or cheap. Think about this. If you own a business selling chocolate bars in a store, I'm going to use some really basic example. You have a corner store at the side of your street where your house is located, and they sell gas and they sell chocolate and they sell some milk and, you know, some beer or whatever the case may be, right? If that store is expected to stay in business, it needs to buy its inventory for $1 and sell it for $5, or else there'd be no margin. That is the exact same way a trader makes money in the financial markets. The problem is we don't know where to buy crude oil for $1 and sell it to $5 because the market is always changing. Everybody has a different opinion about that. And that's what makes up a free market. So all I can tell you right now by looking at this example is that everything down here is considered cheap. Let's say that's the $1, and everything up here is considered expensive, and let's say that's the $5. If you bought down here and sold up here, you will make money, or vice versa. But that's not a strategy. That is just understanding how the auction works. And that's exactly what we're here today to do. We're here to show you how to take this one step further. The algorithm that we've built uses current day analysis and prior day auctions, because what's interesting about the market is current day, which is this example, and this is prior day, okay? This is prior day. This is already done, it's not going to move. This is already done, it's not going to move. This is unknown. We don't know what the market's going to do today. That's the whole benefit of an unfair auction is knowing that the market could do anything at any given time. It could produce low volatility, high volatility. However, that's why traders struggle, because we're still left to understand to our own demise how to make a decision on dynamic conditions. Prior day's data, it's fixed. So when we don't understand how to ascertain the auction, or let's say it's still unfolding for the day, we leverage prior day's data because we have a defined auction. Some of you guys say the high and low of day. A lot of times traders don't put enough emphasis on the high and low of day. I'm here to tell you that we don't just use the high and low of day. We add a component of where structure is actually being controlled at the high and low of day. And that's exactly what we do. We have a price action algorithm that basically looks at price structure reversals at the high and low of day to be able to ascertain an auction. Okay? David says your current day is a done day. Well, here's the thing, right? It's the current day is always unfolding. So if the market is not giving us an auction to identify, let's say we put a high in, but it just keeps going higher and higher and higher, or we put a low in and it just keeps going lower and lower and lower, what ends up happening is we have to wait for structure to prove itself and actually change for us to be able to wrap an auction around that. And that's exactly what is designed to do is we look at the high and low of the auction on both the current day and the previous day, and then we wrap the grid around that if we're able to determine that either on the current price or the prior day's price. Now, why is this important? Because first of all, let's just take a look at this. This comes down and then we have a structure break. That's a pattern, okay? This comes up and that's a structure break. That's a pattern. But what's important is that pattern's happening at the high and low of day, and it tells a story. The story is that in the low of day or in the high of day of the market, the liquidity changed where buyers or sellers became more powerful to one side of the market. That's when you get structure changes. Structure change will happen when one side of the order flow process becomes more powerful than the other. That's the whole point of a lower high or a double top or a triple bottom. Like, the reason these terms are used to define that, that's the layman's term. But the technical term for a technical strategy builder or an architect in the market, we look at what's creating that structure change, which is inside data of order flow analysis and volume. So what we're doing here is we're looking for pattern recognition at the most important parts of the daily auction to make sure that we can put the proper curve grid around cheap and expensive price levels. And that's the most important part, is to be able to know, because if you were a business owner, like the restaurant owner or the guy that was owning the corner store that I mentioned earlier, if you went to your supplier and every time you went there, his prices were different, you would never be able to run your business properly. If you went to them every day and one day what you spent $1 on yesterday was $3 today, it'd be really hard for you to make a business out of that. And that's why trading is so challenging, is because every day what was yesterday doesn't necessarily mean it's going to be today. And that's why we built this, because the auction curve will always tell you where cheap and expensive price levels are located. Because that's the first step to becoming a profitable trader, is knowing when to be buying things when they're cheap and when to be selling things when they're expensive. End of story. Okay? It doesn't matter if you're trading trends, moving averages, if you're using order flow volume. If you do not buy cheap and sell expensive, you will not make money. Or if you do not sell expensive or buy cheap, it will not work for you. It's irregardless of any trading system. Okay? Now, how do we put this into context? Let me show you. Give you an example of an aligned market. An aligned market is when we are in cheap prices and buyers are controlling the order flow. So this is an example where your structure is working to your side and you're in cheap price levels. Okay, and I don't want to spend too much time on the chart on the PowerPoints. I want to get into the charts and take a look at this, but I'll give you an overview. Is when you're cheap in value and the prices are breaking structure highs, this is when buyers are controlling structure at value. Okay? When you're expensive and prices are taking out structure lows, this is when the sellers are controlling the market at expensive price levels. Okay? What ends up happening is sometimes the market will be cheap and prices continuously keep breaking the lows. The market's trying to find balance. They just keep going lower and lower and lower. Even though you're cheap, the market just keeps falling. Okay, that's what we call a mixed market. Same thing at the expensive side of it. If you're expensive and your market just keeps going up and up and up, and buyers are controlling the price at expensive price level, that's what we call a mixed market, because technically when things are expensive, okay, when things are expensive, what ends up happening is that we would expect sellers to start controlling the market. But when buyers are still controlling the market, okay, at expensive price levels, that's a disconnect. We should be a little concerned about that, because that means the market's unsorted. Okay? And John's saying, can this being taped, can I get a copy? Yes, it is being recorded, and between Renee and myself, we'll make sure that you get that. Okay? It says, oh, I see the indicator on the top left-hand side. Yes, we're going to be talking about that. Okay? So we have aligned markets and we have mixed markets. Okay? But I want to talk about this because everybody in here is trading a lot of markets, right? And so the goal here is that we are going to tell you how to be aggressive or conservative based off market conditions, based off location, based off directional structure, and then you'll be able to decide if you want to be trading aggressively or trading conservatively. And what's really nice is I've built the software in a way that allows you to either use scanners, or if you're just day trading one or two markets, you can use what we call the sentiment box. If you're somebody that's scanning all Forex pairs, I'm going to show you how to scan every one of them within a minute. If you're somebody that's scanning all the futures markets, I'm going to show you how to scan the entire basket of global futures in a second. And you'll be able to identify which markets are cheap and expensive on the fly. You'll also be able to do that on one or two markets depending on your preference. Okay. Now, I like to call this what we call a trade map, because a trade map is kind of like a mini trading plan. And the goal of this mini trading plan is to look like this. So this is how the trading map can actually be broken down into two different components. And I'm going to grab a cursor here, and then after this, we're going to go right into the charts. And you're going to look at the software. And we're going to spend we're going to spend a lot of time showing you how this works. Okay. So there's two ways in which you can use this permissive framework or this add-on for every trading system that you have. You can either use the scanners, okay, which basically allows you to input the software into all of your markets, and you'll be able to see where you are on the grid. If you're cheap or expensive, you'll be able to see who's controlling the market, who's winning the battle between the buyers or sellers, and you'll also be able to see the permissive action. Is there no opportunity? Do you have a buying or selling opportunity, or do you have, or are you just not trading, right? It gives you the insight to scan a whole lot of markets really quickly. Now, if you're somebody like our scalpers, like we run a scalping room, and we don't like to trade more than 3 or 4 markets, period. Scalping is even harder to make money than intraday trading or swing trading, because you have to be a lot faster. You have to spend less time looking at more things and be more specific with entry, because you're trading with smaller stops. So what we do in the scalping room is we advocate using the sentiment boxes, because you can apply the indicator to each individual chart, and you're not scanning a whole bunch of markets. You're just looking at 1 or 2 that you primarily trade on. So it really depends on you. If you're somebody that likes to look at everything, you can use the scanners. If you're somebody that likes to day trade 1 or 2 markets, you won't need the scanners. And the goal here is to understand what this is doing. We start at step 1, that's step 1. We go down to step 2, that's step 2. We then go to step 3, that's step 3. 1, 2, 3. What is our permission? That's really what we're trying to get at. Because then you have the ability to look at your demand or supply zones, your Fibonacci levels, your support or resistance areas, your market profile value areas or value area highs or lows. You could be looking at dojis. Maybe you want to use, breakouts. Whatever the case may be, do it at the right place at the right time. Okay? Now, if you're somebody that is using just the day trading charts, well, 1, 2, 3, right? 1, 2, 3. It's really there to automate the process so you don't have to think about it. Trust me, it took a long time to develop this, and it was worth the wait, because what we're able to do now is we're able to basically give ourselves a permissive action to take trades on the strategies and the software that we use. Okay? Now, I'm going to take a second and grab a glass of water here. Just take a sec, clear the throat. While I do that, can you guys give me a yes, no, or maybe so if everything that I've said makes some kind of sense to you? You've enjoyed it so far. You're getting a little bit out of this. Are you learning something? Give me a little bit of feedback. If you're following along and you find that some of this could be relevant to you, or at least it's a new concept that you're willing to look into because you may be able to learn something new or maybe advance what you're already doing, okay? Aaron's saying, is this based on daily charts or multi-time frames? You can set the settings to basically be used on anything, right? Like normally you want to be using this on less than daily charts. The reason for this is because it's meant for intraday trading. If you are using daily charts, you'll need to go out on weekly levels. It'll be harder to ascertain the curve, but yes, it can work on bigger picture. But however the case may be, most traders that are scanning global markets, and here's the thing, you don't need to use the scanners on daily charts. If you wanted to, you could, but regardless here, let's just go into the charts and actually do a deep dive on software, okay? So what you're looking at here, guys, is just 4 markets that I've chosen to show you, and what the reason I've done this way is to show you that I personally don't trade on all of these different bar types. I did this on purpose because when you look at an event like this with hundreds of traders, you can't just put somebody into a cookie cutter environment. And some of you guys like volume charts, some of you guys like Renko bars, some of you like range charts, time-based charts. That's the whole benefit of using an add-on tool like this, is because what ends up happening is I can show you how it works across all of it. Okay, now these are day trading timeframes, mostly smaller timeframes. So for those of you that are stock traders in here, you got an investment, fund, or you're looking at bigger picture, bear with me. We can look at a higher time frame if you want after, or it's the same concept. However, I just want to show you that we'll be able to look at more activity on a smaller time frame and to show you the responsiveness of it. I'm going to pull crude oil up over here, and I'm going to just show you crude oil. Crude oil is, I could tell you right now, crude oil is an expensive market. I can tell you right now that even though we're expensive, that the buyers are controlling this market, and therefore that if I was to sell, why would I be selling? Because let's not lose sight of this question. When you're in retail, retail equals sell. You only want to be selling things when they're expensive. If you're not, you're really going to have a hard time longer term gaining consistency. When you're in value, you want to be buying, okay? You want to be buying things when they're cheap, okay? And you want to be selling things when they're expensive. However, let's talk about this. Let's pay attention to what that's telling us over here, okay? The question is, how do I use that to make money? How do I use that to help me make money? How do I use that to enhance my trading systems that we're using? Well, first of all, if you were to sell crude oil when we're trading in this environment, okay, to the hard right edge, the answer should be, what type of permission is this? Well, if I'm expensive, but the buyers are controlling things right now at expensive price levels, if I'm selling, that's an aggressive stance in the market because I'm selling against buyers that are controlling the price structure, even though I'm expensive. Therefore, you need to know your environment. If you're trying to fade or sell supply or sell resistance, you're going to have a harder time making it work because buyers are still controlling prices, even though we're at expensive price levels. And I'll tell you where that happened. Price came up. Right there. We took out structure. Right there. Right there, that story is told using order flow. Inside, if you were to have an order flow chart, you'd be able to see that the order flow would exchange and your buyers would be controlling the market from that structure break. So from that time on, look at, we started having higher lows every single time. Therefore, the software will tell you that without you having to learn that. You just need to learn how to read this. Very simple. And the reason I like simple is because trading is already complicated as it is. We don't want tools to make it more complicated. Okay, let's go in and take a look at a different market. Okay, let's take a look at the euro. Okay, I'm going to go here and hard right edge. And you see how there's no curve here? See how there's no curve? Sellers are controlling this market without a doubt. However, take a look at this. If I just go back a little bit, the software will adjust based off structure, okay? When the market is continuously putting in new lows, new lows, new lows, we have no way to ascertain the auction on the current day unless we go back, okay? Unless we go back way in time. Well, day traders are normally not going to have a whole bunch of charts loaded with a whole bunch of days on it, right? You're running order flow software, market profile software, all that stuff. You don't want to have a whole lot of look back periods on your charts because that creates, right, a lot more lag on your computer. However, on situations like this, if your market's not in an environment where you can ascertain the trade permissive map, you're just not trading the euro right now. There's no opportunity to be able to make sense of the location and the structure. It'd be one of those situations where you just move to a different market. Let's take a look at gold over here on a range chart. Gold over here is also expensive, but structure's up. It's the same thing we were just looking at with crude. Let's take a look over here. Let's go in here and let's just move this out over here. Take a look here. If we're going up and we're expensive, okay, now we're cheap. Take a look right here. See how structure is down? Okay, structure is down right there, but we now became cheap. You have to remember the software is going to identify when things are cheaper, when things are expensive, and then price goes back up. Now that's not a strategy. That's just showing you how the software reacts to the price levels, okay? I want to basically walk you through another market and then show you how we scan all of the markets, and then I'm going to break down Forex and futures, right? And that way we can start asking questions on how to use it for trading, okay? Let's take a look at the NASDAQ, okay? If we go back to the NASDAQ down here, okay? If I take a look at the NASDAQ was in an oscillating environment in this situation, okay? and then price became expensive. Now, think about this. Price became expensive because it's going into retail territory. Does that mean that we should be selling just because we're expensive? That's not the strategy. The goal of this tool is to tell you when you're expensive, when you're cheap, and who's controlling the price at those levels. If you're somebody that maybe has a resistance level right there, maybe you have a supply zone there, or you want to start selling the market. If you're going to start fading reversals in expensive territory, okay, going against the buyers, right? Like buyers are controlling the market here. We can see this because of the structure is up. Yes, we're expensive, but the structure is up. Okay? It's really important to know this is one of the reasons why reversal traders have a hard time, is because they try to fade reversals against the market. I'd rather be a seller when the structure is on my side than against it. Okay? Now, how do I know that? Well, that's really why I built the scanners and why I teach this in our scalping rooms. And I'm going to switch the workspaces over because we're going to go through each market one by one and we're going to scan it and we're going to talk about it. Okay? This is a really trusty, fancy scanner. I'll show you how awesome this is. I'm just going to grab a market analyzer right now, and Aaron's asking some great questions. Don't worry, brother. I'm not ignoring you. I just want to stay on topic, and we will go over the questions in a moment. So I'm just going to load a scanner right now, and I'm just going to add an instrument list. Let's just say I want to add futures, and I want to add all of them. Okay, so there's a futures list. Okay, I'm going to go in here, and I'm going to basically grab the scanner. And you see here where it basically says 10 FR. I'm just going to scan these on a 10 full range chart. Let's say you were using a 10 tick range bar, you would use the scanner. If you wanted to use a volume chart, you would have to make a copy of this scanner template and change the time frame that you use inside the settings. That's all that really needs to be done, because I don't know what markets you're trading or what fractals you're using or what type of bars you're using. You might be using a Renko bar or a range bar or a volume bar or a time-based bar. We built a master template, and our support guys like Ben and myself will easily help you adjust your templates so that you can, change the settings for yourself. Now, let me show you exactly what this looks like. I'm just going to load this template. Watch how fast it scans all these markets. It's going to scan every global asset. And right now, I can tell you right now by searching permissive action that ultimately I could tell you that the natural gas market's in a cheap environment, but structure is controlling it. So this is a safer play to be trading the natural gas right now. I can also tell you that the NQ is in a conservative buying environment. It's a safer environment to be trading long. When I say safe, whenever it says conservative or conservative sell or conservative buy, that means that you're in cheap or expensive price levels and the market is working with that area. So let's say if I was, and I'm just going to close that out and I'll show you how we just scan the Forex markets now. I'll just go in here and I'll grab a market analyzer and I'll just add the entire basket of Forex markets. Let's do that here. Let's say you want to scan all your Forex pairs. Give me a second here. Okay, and let's just go in here and load a template. Okay, just going to grab it here and let's just scan that and 50FX like that. Watch what happens here. We'll just scan the Forex markets. And there you go. I could tell you right now if I just search by permissive action that the British pound to the US dollar is in a conservative buying environment. The US CAD is in conservative buying, and then the Aussie dollar, US dollar is in conservative selling. I can tell you right now the Euro USD has no tradable action, and the Euro Swiss franc has no tradable action. And every other market is an aggressive buying environment, which means that if you're buying against the structure, which means you're trying to catch a falling knife because you're trading against the sellers controlling prices at cheap price levels. Now, guys, I've got 10 years of experience building software for advanced algorithms, right? I say this really quickly, and I know that some of you, you're probably like, man, I'm drinking from a fire hose right now. You're just feeding me with information. Let me go through this one by one and teach you slowly how to do this yourself, okay? I'm going to start, there's two tabs down here. I've got a futures tab and then I've got a Forex tab. I'm going to start with futures because I'm a futures trader. Then we'll go to Forex and we'll take a look. I'm going to go to the scanner here and I'm just going to search permissive action right now. And the reason I've done this is I can search I can choose to accommodate this however I want. Let's just go down here and let's say natural gas. I'm just going to click on natural gas. I'm going to change it to the natural gas chart. And this is interesting because right now I can tell you, just looking at this, I don't have any other indicators. This is strictly price action alone and location, right? Now, here's the cool thing. All you need to do is know this, that you are now on this market at a cheap price level, and buyers are controlling the structure here, and they've actually been controlling it ever since there. So that means that if you're looking to buy whatever strategies you're using, meaning it's support levels, demand zones, bullish divergence, anything like that, you are in a situation where buyers are stronger than sellers at cheap price levels. It's confirmation. It's giving you confirmation that the buyers are controlling the market when the market is cheap. That's a good thing, because if you're wondering if you're going to be stacking the chips on your side, it's a great add-on for whatever tools you're using. Okay, let's go to a different market and let's assess it. Let's go over here and let's take a look at the NQ. Okay, the NQ, we'll do that. Give it a second. Now the NQ is borderline. It's sitting right there at the top. Okay, but if I go back here, you'll see what happened here. It changed. It adjusted. Took out structure. So the buyers right now are controlling this market, but I wouldn't be looking to participate. When we're sitting here dancing in the middle of this market, it's not something that I'd be interested in trading. Okay. Now you're probably saying, Sean, I don't get it. I show me where to buy or sell. Well, first of all, let's hold off on that, because this is not about teaching you where to buy or sell. It's teaching you when to be buying and selling for the best probability based off your trading systems. And I'm going to show you an example of another trading system, a complete trading system that uses this in our trading room on a daily basis to help us with permissive action. Okay. But I first want to teach you how to use this tool and scan all the markets. Now, let me give you an example of the British pound. The British pound, you see, it's the only one that says conservative sell. If I go to the British pound, we switch it over. Take a look at what the British pound is, okay? If I go in here and just switch it up like this, we're in expensive price levels up here. But do you notice how the structure is still up? If I go in here and I basically do that, this is interesting, because now what this is telling me that we're expensive, price came in and it took out the lows. In order for it to do that, there has to be sellers must be greater than buyers. That means there's more supply in the market than demand, and we're expensive. That's a good thing if you're a short seller, because you don't want to be selling things when the market is buying up. You don't want to be selling the market when the markets are lifting the bid. It becomes harder for you to make money because you're going against the flow of the liquidity. And when I say the flow of the liquidity, I talk about the entire market as a whole. Right? We don't know if it's hedge funds, money managers, retail traders, private offices. It doesn't matter. The market is going to move in one direction or the other. You need to know how to understand that and put those, advantages to your side. Okay, let's go in here and take a look at a different market. Let's go and take a look at gold. Okay, gold, it's a great example of gold being in an aggressive market. And when I say it's an aggressive sell, you see here, I'm always paying attention to the permission, because that's the end decision, right? Like, once you learn that you're expensive or cheap, once you learn that you're either going up or down, it gives you permission to think about making an executed decision based off your strategies. And so if I think about the permission here on gold, well, the reason it says aggressive selling is because we are expensive, therefore we should be thinking like a seller. We want to be selling when things are expensive, but the market's going up still. So if I'm going to be selling, that's aggressive. I'm going against the buy liquidity that's controlling the structure. And that's why traders that are trying to fade reversals in uptrending markets get run over, because they're going against the buyers that are controlling liquidity. Right? And this is a really, really good way for you to see that. Now I'm going to go in here and I'll give you another example. Pull one more. Let's take a look at the S&P. The S&P, let's just do this here. The S&P is starting to break the midpoint of the auction. Okay. And basically what's happening is its structure's up. You can see that we're making higher highs in price, but we're starting to become expensive. Fading this would be aggressive because you're going against the buyers that are controlling liquidity, expensive price levels, right? So this is why we do this. Now let's go over to Forex for a second, and let's just sort this out. Permissive. Let's take a look at the Aussie USD right here. It says conservative sells. Why is it a conservative sell? Well, this is interesting because as soon as it came here, it broke the structure. It broke the structure at expensive price levels. Let's not lose sight of the fact that this is step 1. This is step 2. This is step 3. Conservative selling means if you're going to be selling, it's a conservative environment. It's a safer environment for you to be looking to put on a short sale. If you were maybe to short the retest, or if there was a supply zone up here, or if there was a resistance level here, you want to get on board and short it. Now you can see that sellers are controlling prices at expensive levels. That's exactly what this is telling you. Okay? That's exactly what this is telling you. Let's take a look at British USD. Let's take a look at this. Now, I might be not looking at the market of your choice. I might not be looking at the chart bar types of your choice. That's expected when you've got hundreds of traders, because I don't know all of you guys personally, as much as I'd love to someday meet you in person. I just don't have a way to know that going into the event. So we actually can do a demo for you, and I'll explain that in a moment, but let me kind of finish the topic here. The British pound to the USD, we are in a cheap environment and structure is going up. This tells us that we're in a conservative buying environment. What that really means is that we're in a safe buying environment because we're cheap and buyers are now controlling structure. Okay, let's take a look at the US CAD. Same thing. You can see that we're in cheap price levels and buyers are now breaking above the highs, which tells us that we're in a buying environment where the buyers are controlling the market, right? And this is really as easy as it needs to be. Now, I'm going to give you an example of how this would work on a trading system, okay? Because this is not a trading system. This is a permissive trade map that you can use with any trading system that you own. Now, I'm going to basically go in here and basically go, let's do this here and open up. Let's just load this up. Laptop range, GPU, SDF, perfect. Give me a second here. It's going to load a bunch of charts. This is a day trading workspace that we use in our scalping program. And, you know, we've got some market profile charts, we've got supply and demand charts, and then we've got our entry chart, okay? And this is really why this is such a powerful tool set, because the way in which we teach traders how to stack the chips in their favor, so to speak, is when, and give it some time to load here because it has to load all of our software, and we're loading several markets, and we're loading order flow charts and supply and demand charts, and you name it. This is what you would do on your computer if you were to invest in a tool. You would apply it to your trading systems, right? And let me just give it a second to load here. Let's go in here and just double check. Switch that over to the other market. Let's do this here. Let's go in here to futures, gold, switch that over. Perfect. Okay, and bring this over to gold. And the reason I'm doing this, guys, is because I want to show you how this works. I'm just going to roll the contracts over here. Gold just rolled over. And we're going to show you how this works interchangeably, okay? And this is really why I feel so strongly about this tool, is because when we first released this to our traders and our community, we've got thousands of traders all over the world, and we've got several rooms, but the point of the matter is that has it helped people? And when we rolled this out, in fact, we've got some traders in here that have already spoken to that, but when we rolled this out, what we found was traders were taking less trades and their winning percentages were increasing. And the reason for that is because the trades in which they were taking were much better. Okay, and they were higher probability trades, they were higher quality trades because they're being more restrictive with application, and they're being strategic in terms of when and where they want to be pulling the trigger properly. And that's really what a professional trader's job is to know and exactly how to become a better trader at all times, right? Our job should be about developing our skill sets at all times, at all costs. So let me give you an example, okay? We normally start with a higher time frame chart. We'll assess big picture supply or demand. We'll look at support or resistance. We'll use this to make macro context decisions. This is a 30-minute chart You can see support levels, demand zones, supply zones. That's not really the topic for today's webinar. You can also see here that we've got a market profile chart in here. If I just switch this over to a profile view and I just bring this off, okay, and turn this on here, you're going to see I've got market profile charts on crude oil, and I've got it on the euro as well. And the point of this is that we use market profile, we use supply and demand and order flow, we use support and resistance, etc. But where this tool comes into play is when we enter trades and we execute, because the execution chart is how you trade. Big picture context helps you with making decisions. And you'll notice that right now, if I were to just look at this chart, I've got some supply and demand levels here. I'm going to open up to an order flow chart. You can see that, you know, let's take a look at this. There's this big fat resistance level right here. This is a Fibonacci confluence resistance level, okay? And if I go in here and I just turn on previous supply zones, okay? If I take a look at what was there before, there was supply there, there was resistance. But what our software is going to do is it's going to tell you that if you're selling this resistance level or this supply zone, you're doing so very aggressively. Because to me, this would be a much lower probability short because we're going against the structure at expensive price levels. Okay? So give me an example of what I mean by that. We're at expensive price levels. Anything above this line up here is expensive. We should be thinking like a seller is greater than a buyer, right? Well, that's not the case. Because right now, even though we're expensive, the buyers are controlling the sellers right now, even though we're expensive. So anytime we try to sell, we have a lower probability of the trade working unless we actually catch the one trade where the market changes. And that puts a lot of pressure on you to always be right about shifting the direction of the market. Okay, so let me give you an example of when this would be really identified as a good trade. Okay, let's go back here. Right here. Okay, and let's go in here. Right here. Give you an example of a quality environment. And I'm gonna turn the other stuff off so it's less confusing. You notice how the range is really small here. This is the Globex range for this market on gold. But if you take a look, I got a demand zone and a support zone down here. And this is an example of how to use this for order flow traders or supplier demand or support and resistance. You might not be using those three, but these are our primaries. And so if you take a look, we've got a support level here, got a demand zone here, right? Those are two levels in which we could look to buy in. But let's take a look at this permissive map over here. When it comes down, what is our permissive map telling us at this time? Can you guys answer that for me? Where are we right now? On this bar, if I was a scalper and I was looking to increase probability using the auction curve, am I cheap or am I expensive right now? You guys tell me. I'm going to ask you guys some questions. I want to see who's listening. Okay, am I cheap or am I expensive? On the close of that bar right there. Cheap, Daniel says. Anybody else wanna go along with Daniel? Daniel says we're cheap. Okay. I think the Saturday afternoon is getting to everybody. Steven says cheap. Aaron says it's a safe buying environment because it's cheap. Everybody's starting to respond now. Okay, well, what is my structure? Structure is up. I am cheap. What is my permissive? My permissive action tells me that if I were to buy any type of strategy right now at a support level or a demand zone or a Fibonacci level, anything like that, I have a higher probability of success because I'm buying in cheap price levels and the structure is on my side. Okay, so that's exactly what this tells us. Take a look. We're in cheap price levels. Structure is up. So if I were to put a long on right here, right, if I were to put a long position here and I were to look to buy, okay, I would have a higher probability of mapping out my permission. Because remember, fib levels, that's our entry method. Demand zone, entry method. Maybe I get an order flow reason, maybe a shift in positive delta. I really don't care how you trade. I'm here to show you how to increase probability of how you trade. And that's the biggest best friend to any trader, is how can I stack better odds to my system? Okay, take a look. That's exactly what happens when you buy in the right locations at the right time. It's nice confirmation, Aaron says. Exactly. Exactly. Let's go to a different market, crude oil. Let's go to crude oil. Let's go to crude oil. Let's go to crude oil. 1 second here, guys. I'm just going to, okay, just going to turn some things off here. Okay, so we're looking at crude oil. And if I were to look at crude oil from a big picture context, you can see that we've got big demand, big supply. We've got some support and resistance levels here. But that's not our execution chart. That's our big picture context, right? James says it's like coming out of the fog. Exactly. Let's take a look at it. If I'm looking at market profile right here is not telling me I should be a buyer or seller or anything, but it's telling us about the daily auction, which is a completely different discussion. But if I'm going to switch to my entry chart and I'm trading crude oil on a 10-tick range bar, remember, crude oil is a pretty volatile market. If you're trading on a 10-tick bar, most likely you're trading with tight stops. You're a scalper or you're a small-time day trader, right? Think about this. I am on a support level here, right? A lot of traders are like, oh, I'm at support. Oh, I'm at resistance. Oh, I should be buying or I should be selling. That rat race in our head that gets us going when we're sitting by ourselves at our computer, that makes it very difficult for us to ascertain probability. Right now, I can tell you that we should never even be looking to buy support, even though we're on a support level, because we're in a seller's territory. So sometimes this will keep you out of trades that you would have normally taken. Maybe you will learn to not take so many trades, and it will be better for you to take better probability trades. Okay, and that's exactly it, because a lot of traders, you know, and we get this in the trade room a lot. You know, we see a support level here. Traders like, I want to buy that. You know, we're going up. We should be looking to buy support. No, we shouldn't. Just because the market's doing something doesn't mean you should be doing with it. We're expensive. The first rule of this tool is to always be selling when things are expensive and buying when things are cheap. Then we choose, are we going up or are we coming down? Are we going down or are we going up? We want to be going up in the cheap price levels for it to be safe. Safer. Doesn't mean you can't fade. It's just, it's a safer trade. You want to be going down in cheap price levels for it to be safer. And then you can look to enter on whatever strategy you're looking to trade. If you're shorting resistance or buying support, if you're fading supply or demand, if you're using order flow bars, like we have order flow bars right here. We have signals. You can see there's little arrows on our order flow chart. Some of you have probably an expensive market. You've probably invested thousands of dollars on software from other vendors, and it's probably really great software. I'm here to enhance it. And I know that because this is one of our top selling tools for that purpose alone. If you go to our website, I'll give you guys a little bit of history about what NeuroStreet specializes in. We run pretty active trade rooms, and we're not the only guys in the business that are doing things right. There's a lot of great companies out there. But one thing that we do is we run trade rooms that are backed by performance. And one of the reasons why we are who we are is because the software that we design, it's kind of like when you go to a car dealership, you can buy the Volkswagen Beetle, right? You can buy the Volkswagen Beetle, or you can go a block up the street and buy the R8 Audi, or you can buy the AMG 500 Mercedes-Benz. We designed the Mercedes-Benz AMGs for software and algorithms. And we chose that when we created our business product line because we spent a whole lot more time designing very, very complex algorithms to make trading very simple, make it very easy to understand. And that takes a lot more time and a lot more money and a lot more research and skill than just putting out rudimentary tools. Now, that also has to be backed up by traders trading it, which is why we run very active trade rooms using these tools. And I speak very, confidently on that because I'm part of the design team and I'm also part of the trading education team. And so for me to come in here and do an event with these speaker jams, it's a gift because there's so many traders in here that are looking to become better. The auction curve is one of the most important tools that we sell because it enhances almost every other product that we use in our trade rooms. Okay, and that's why I chose to put this on today, is because a lot of you guys are trading different systems. I think this can help a lot of you nail down probability enhancement to what you're doing. And here's what I'd like to kind of end with. Most of you guys don't like webinars because, yes, you learn a lot, but that doesn't really make it personal to you. We hire a team. I've hired a team of traders that were once our traders, bought our software, joined our trading rooms, became successful, and then they decided that they wanted to work with our organization. So we hired a team of account managers that are traders using these tools, and they will book a demo with you. They will get on your computer with you. They will do a demo one-on-one, answer your questions one-on-one. If you have specific markets, specific needs, specific requests, I'm going to put a link in the chat box right now. If you guys want to book a demo with an account manager, please just fill out that form. If I didn't get a chance to cover anybody's questions or anything like that, and you want special treatment, that's what we're here for. Okay, we want to help you become better. Okay, there's a book a demo with an account manager, and we'll definitely follow up with you, and we'll definitely help you get to where you need to be. Okay, second of all, on our website, there's a link that basically maps out. Okay, there's a link that basically maps out this product in detail. I'm putting some links in the chat box. Please save them. It's important that you do that. And there's an information video on this, and it talks a little bit about what this tool is. Okay, and when a customer purchases the software, okay, when a customer purchases this tool, what ends up happening is you'll get access to download instructions. You'll get access to user manuals, instruction videos, extra training. You'll also get, the templates that come with the scanners, okay? And you'll also get user manuals and usages and settings guides. So you're not just buying an indicator, you're buying training with that indicator as well, okay, which is really, really important. And let's not lose sight of the fact that, we really do want you to join our trading room on a guest pass, because whether you want to see this in action, if you want to see this software used in action, you're going to want to join the supply and demand and order flow program. And even after you join that program on a guest pass, if you decide you still want to go to the other room as well, just let us know. We'll give you a guest pass for the second room for a second week. We're very open about that. It'll make it easier for you to come in and be a part of our team. Okay, so let me kind of go in and kind of explain what the software costs and how it works and how to get your hands on it, and then I'll explain questions. And like I said, if you're somebody that would like a demo to go on the charts with your markets and your time frames, Borja is asking, does it work on a 5-minute chart? Absolutely. It works on every time frame, every bar type. As long as you have data and you have market access, you can apply it to the chart. Yeah. Okay, so it comes for 2 computers. You've got unlimited support in every area possible. We provide you with the training, the videos, the user documentation, plus it says the free auction curve scanners. I've built the scanners, okay? I've built the scanners, and I'm going to give you the sales link in a second if you guys are going to purchase this, but I'm going to tell you the scanners, they'll need to be adjusted because sometimes you might not be trading on the same markets that we are or the same time frame, so that's why we have an in-house support guy that will log on your computer and help adjust that for you, not a problem. But you're most likely got questions, right? We've got a full-fledged sales and account management team that can do the demos and that. The contact details are on the slide here. Just take a screenshot of that. There should be a little screenshot button on the top window of your GoToWebinar environment. And James says, I can't get through on the sales call link. Okay, well, first and foremost, at any time, if for whatever reason, if any link that we gave you, if you're on an iPad or an iPhone or an Android or something like that, mobile web link, if a link doesn't work, when all things fail, just send an email to sales@neurostreet.com and we'll jump on a call with you. We'll get you a demo booked regardless, okay? Now, what I'm going to do is I'm going to put a purchase link in here. Okay, I'm going to put a purchase link. And this purchase link is so that if you're interested in saving $400 off the software, which is a substantial deal. Reason why we're doing $400 is because Renee brought us in here to speak to such a large group, and therefore we can justify giving such a big discount to such a large group. Can everybody see right? Yeah, James, I'm not sure what's happening there. I think it might be just on your side of it. There's a link inside the chat box. It's a purchase link. Okay. I'm going to put all the links in the chat box here for you guys to have. Just copy and paste them all so you have them. Okay. I just put a whole whackload of links in there. There's guest pass links, there's demo links, there's a performance page to all our trade room moderators, there's a testimonials page, you name it. I think the best thing to do would be to just copy and paste all of them to a notepad on your desk, and you can go through and do some due diligence. You can do some reading and you can check us out. Okay. So I want to thank Renee for having us in here. I want to thank for all of you guys for joining me on a Saturday. Let's get real here. For those of you that are here on a Saturday, I want to work with traders like you because you're the right group of people. James says that worked finally. Okay, perfect. Yeah, so the links worked for perfect. And I really want you to get social with us. You know, we've got a YouTube channel. We put tons of content out on a regular basis. You know, we've got an active Instagram and Facebook following. You know, that's growing, but more importantly, we put tons of content, right? So Dar says, great presentation as usual. Dar's been one of our first customers for years, good friend of mine, and glad to have you in here, Dar. Thanks for the kind words. But I'm going to turn it over, Renee, for questions. I know I don't know if you have another speaker coming on or if I'm the last one, but you know, maybe you can let me know yes or no if I'm able to stay a couple minutes extra and answer questions, or if that's kind of it. If you guys are tired and you want to shut her down, let me know. I'm more than happy to stay longer and answer questions. But John wants to know, can alerts be used with the software? Yes, we do have alerts built into it. Boris says, does it work on minute charts? Yes, it does. Tommy says, gets me out of the chop fest. Yes. Can you use it with stocks and ETFs and on TradeStation? What's interesting enough is we're actually in the process of making our software compatible on both TradeStation and Ninja. The cool part is that we were originally built on Ninja because of their coding environments, and then TradeStation, you know, their advancements to version 10. We've been slowly migrating all of our product line over there. So it is not yet available on TradeStation. It will be shortly. And you know, if you are a TradeStation user, you could use a demo feed on Ninja to get started, and you could execute on TradeStation. We've got a lot of traders that do that. However, if you're interested in using it on TradeStation, it is coming soon. Very soon. Okay. Bill says, thanks for a great job. No problem. Thank you. James wants to know any updates. So what we do for updates is we provide you licenses on 2 computers. Whenever we make a feature update or a bug fix, we don't charge for that. We don't do that. You know, it's part of it's the reason why our software is a little bit more expensive, because it's high end, but we do take a lot of the cost in-house for that. So at this time, we don't have any update costs for the tools. No. And if you're interested in joining our trading rooms and our programs, that's a whole different discussion. But for the most part, I think, you know, if you're going to be investing with us to come trade with us on a full-time basis, join us in a guest pass first, because you know, we're not here to try and drop a big price tag over a package or sell you stuff. You need to come in and feel if you like what we do. Right, you need to know if you're comfortable in our trade rooms, right, and you like what you see, right. And I'm a firm believer of we lead by demonstration. Right, lead by demonstration. Right, so it can be used on Thinkorswim or eSignal. Thinkorswim's pretty restrictive for their code. A tool like this is not easily coded for their platforms. Their code language is not as easy to work with as some of the others, so no, not at this time. And eSignal, we've never really looked with eSignal. I know they're a pretty robust platform, but we've really just stuck on the Ninja and the TradeStation side of things, and that's kind of been where we've been at. Yeah. So if you are using other platforms, it's easy to download a Ninja license, and it's easy to download a demo license on Ninja, and then you can use it and execute. And if you are using any platforms like Sierra or Thinkorswim and stuff, my best suggestion would be to get a demo install of Ninja first, and then use it and execute on your other platforms, right? Because you could use this on one chart on the side of any other monitor and just have your other platforms and stuff operating. Yeah. Okay. Scott says, sadly, I just showed up. What's the software called? The software is called the Auction Curve, and it's for scanning global assets. But the cool part is that we recorded it, Scott. So you're in good shape. We'll get you the recording, and we could book a demo, and you can definitely have some one-on-one time with a trader and account manager who can answer any questions personally. Yeah. Well-oiled machine over here, traders. If you need anything from us, we're definitely here to serve, and we can help you get to where you need to be. We just opened up polls to our trader community to potentially open up Forex and equity rooms as well. We run 2 futures rooms right now. We're definitely growing and expanding in a very good way, and it's because we make good money. Our traders do very well. If you're interested in reading some testimonials, you can go here and you can take a look. We've got, I think when we did this, we had 80 traders write in testimonials when we ran this. George says, can I use it to trade stocks? Yes, you can. You can scan stocks, ETFs, absolutely. One thing here, if you're interested in seeing some video testimonials, if you go to our trading program, we did some interviews with a bunch of traders, and down at the bottom, you'll see that we've got some testimonials with some traders here. And I mean, I think it's just important there's another one there, me interviewing some of the traders, and we're very open, we don't hide behind the screens. We're here to make you become profitable traders, right? So if you want to talk, Jeff Zimmerman's been one of our traders for a while, and we've got Kevin Lawyer, just a new market profile trader with us, doing quite well. Looking to go down to his house in Africa. He's got a villa in Africa. We're probably going to be running a trading retreat down there this summer, which is pretty exciting. So lots of great things, guys, but being a part of our community is where it starts, and I think the best place is to just join us in our trade rooms and take advantage of the promo that we're running for the tool set today. If you didn't get your questions answered, I don't want to keep Renee here any further on a Saturday. I'm sure she's been here all day, and I appreciate the extra few minutes for Q&A, guys. It means a lot. Sales@neurostreet.com. There's our phone number here if you want to talk to a trader. And hopefully we see you guys in the trade room. Take care. And Renee, thanks so much for having us in here. And appreciate the exposure. It's always blessed. Thanks, traders. Have a fantastic weekend. We'll see you on the trade room next week. And if you have any questions, Parjinder is saying here, if I can make the auction curve work for me, we don't offer money back stuff. We're very open about that. I mean, we spend so much time on the building of these tools and the expansion of our school that the truth of the matter is that if you just like to see it work first, if you're interested on a demo, you don't need to buy something. Book an account manager demo. Log onto your computers and go back and take a look at some of the charts that you're looking at. That's the whole point of it, right? We can do a demo and you can ascertain if that's the right move for you moving forward, right? Boris says, thanks, mate. You're a good presenter. Yeah, been doing it a long time. Love it. It's part of the lifestyle. Traders, fantastic. Renee, thanks again for giving me the exposure. I'm going to sign off and go hit the gym. It's good to have some work-life balance. Take care, traders, and we'll see you guys next week.
All right, and thank you, Sean. Everybody, please give him a round of applause for a great presentation. And make sure you do check out all those links that he did send out in the chat box for you. And that is all we have for you today. If you did miss any of today's presentations, I just sent out a link for you to click on to subscribe to our YouTube channel, because all of today's presentations will be uploaded there in the next couple of days. All right, and I hope you guys enjoy the rest of your weekend, and please keep an eye out on your email. We have a very special 2-day event coming up in just a few weeks, and you will be getting an invite to that, so make sure you register. It's going to be awesome.